So yeah, so I first got into cryptocurrency. A buddy of mine said he was all in on crypto. He was like, it was the future, you got to get in. And I heard a lot of people talking to me about it. You got to get in this and that, blockchain, Bitcoin, all that. And I'm not a short-term investor. I am a long-term stock investor, and anything else that I get invested in has to be for a very good reason. And crypto to me didn't seem like a good reason. It seemed like it was kind of like video game tokens. They could be potentially worth something within the confines of the game, but as far as out in the real world, they were practically worthless. That's kind of how I saw cryptocurrency. And I saw it as like it was a great way to scam people, to get people's money. And there were way too many people that were getting into it that were not investors themselves. You know, like when I was working with somebody at UPS, he didn't have anything in his 401k, he didn't have a Roth IRA set up, but he had a bunch of money in crypto because it was the future. And but yeah, at the time, 2016, I finally, because my buddy wouldn't shut up about it, I put $1,000 into Bitcoin just to get him to be quiet. And that bought me 2.2 Bitcoins. And at the time, Bitcoin was $450 a piece. Of course, hindsight is 2020. So if I had known that it would be almost 30,000 now, and it would have hit, a high of like 65,000 like it did, what was that, 2 years ago? I would have bought a lot more, but hindsight being 2020, right? So yeah, I had 2.2 Bitcoin, and between 2016 and 2021, I invested another like $4,000 into some of the other major cryptocurrencies, Ethereum, Litecoin. Also as kind of a joke, and because Elon Musk was into it, I bought $1,000 worth of Doge, which is the only crypto I still have. So altogether, I spent about $5,000 on crypto. And when I in 2019, I decided to move all my crypto to Celsius, which was a platform that was paying interest. And unlike other platforms where they had all this stuff I didn't understand about staking and I didn't know what they did with the money, Celsius was paying interest and not in cash. They were paying interest in that same cryptocurrency. So the whole point from the beginning, all I wanted to do was just buy a little bit and hold. That's like with all my investments, buy and hold. And I considered it kind of like a lottery ticket. The money that I was putting in there, I knew that I probably wouldn't make money because, again, I didn't believe in crypto, right? Um, but I was willing to what I like to call set some money on fire on my lawn, because that's kind of how I saw um, that's kind of how I saw it. It'd be lost, right? And so I held. And I made some money pretty quickly. Within the first year, I'd made some money, and people were like, "Oh, you should sell, get out." But that wasn't my point. You know, what I wanted to do was just to buy and hold, right? So I moved it all to Celsius because nothing was happening with the crypto. It was just sitting in my Coinbase account, and all of a sudden, there's this option to earn interest, and that interested me. You know, and so I moved it all to Celsius, and at the beginning it was pretty good. I was making some decent returns. It was like I think like 5% on Bitcoin. And but then I got stupid because they started paying 12% on USD coin, which is a USD coin is a what do you call it? Oh, I'm blanking on the word. It's a fixed
Stable coin.
uh, a stable coin. It's called a stable coin. Basically, it's pegged 1 to 1 to the dollar, right? USD coin. And I was saying, because I had some money in an emergency fund that I was saving to buy a house, and I was thinking to myself, well, my bank accounts, they're only paying me like 0.5%. Why wouldn't I move all the money to get 12% instead? And for a few years, it worked very good. And in fact, um, for many years, I made quite a bit of interest on this, and I pay taxes on it and everything. So that was in 2019 when I moved it all, right? And at its peak, from that $5,000 that I put into all the cryptocurrency, at its peak, I almost had $200,000 in crypto. That's how much it went up. And that is like the goal right there. Whenever you put money into something speculative, the goal is to make that level of returns. Because you can only really expect, if you do with normal investments like stocks, you can expect maybe 8 to 10% a year, right? That's the expectation, right? With crypto, it could be anything. You could make 100x, 1000x, you know, with the if you get into the right thing. But again, the whole time I didn't believe in it as an investment. It was always a speculative play. It was always like a lottery ticket, you know. I was willing to burn that $1,000 on my lawn. You know, if I lost it all, it wouldn't like wipe me out, right? Then 2022, last year, July, Celsius paused withdrawals. Like nobody could pull money out, and those were like some major, you know, red flags, some major warning bells. But of course, you know, I couldn't pull any money out, so what could I do? I just had to sit through it. You know, I knew going into it that it was 100% a gamble, and I would be okay with my money getting lost. Like the example I give is setting my money on fire on the lawn, right? And at the moment, if I still had the crypto, it'd be worth about 100,000, 95,000. That's what it'd still be worth, because from the peak in October of 2021, it's down by about half, right? And anyway, Celsius filed for bankruptcy. And fortunately, because if you're poor and somebody steals from you, nobody cares. If you're rich and somebody steals from you, the government will reimburse you. That's how things happen in this country. So the government is aggressively pursuing Celsius, and it's going through bankruptcy, and it's looking like I may get about a third of it back, maybe. But the cool thing is that even with that, I still made a pretty good return on my money, assuming I'm going to get it all back. But we'll see. You know, I'm hopeful that by the end of this year, we'll hear something. Me and all the other thousands of people that lost money too. Somebody has something in the background. If we can mute, there we go. Okay. So yeah, last July they paused withdrawals, they filed for bankruptcy, and everybody was pretty much SOL, right? Crap out of luck. But it turns out that, you know, because we're investors and not just I don't know why, but we ended up all right. You know, we're going to get some of that money back, and so it'll be all right, I hope. So Celsius is not the first scam or Ponzi scheme that I've been involved with, unfortunately, you know, because as humans, as investors, we want to see something happen. We want some action, right? But the best investors are the buy and holders, the ones and the only reason I made so much money on the crypto is because I bought and hold. If I had tried to trade, if I had tried to make moves with the market, I wouldn't have made as much money. But because I bought a little bit with an amount of money I was comfortable losing and just held, I made an incredible amount of money. How much is that? Like 40 times or something, right? 40 times the money, right? And so here's where I messed up. Back in 2020, I put 50,000 real dollars, not the magic video game money. I put 50,000 real dollars into Celsius because it was paying 12%. And that was the best interest rate you could find anywhere at the time, right? And I was under the impression, because of course they lied to us, that this was safe because USD Coin had a bunch of money, had $1 in their vaults for every coin that was out there. And that ended up, so far as I know, that's still true. USD Coin is still a stable coin. It's still safe. But the problem was where I was holding it. It was Celsius. And they filed bankruptcy. They made off with everyone's money. And, you know, it's just how it is. At the same time, there was another scam that I got into called Watermine. And I knew from the beginning that it was a scam. It was a Ponzi scheme. And I could tell because the returns that they were promising were insane. It was something like doubling your money every 90 days. It was crazy. And if you see anything like that, you should just run far away, because there is no investment that gives you that kind of return without some insane level of risk as well. And you can also tell from, I was looking at the website and they had no real clear picture of how the thing was making money. So I put a little bit of money in there because, you know, just what the hell, you know, I put a few $100s of Bitcoin in there, and I ended up getting my money back, thankfully, but they shut down 2 months later and said they had been scammed, which of course was an easy way to, you know, to run off with everybody's money. So that's one scam I got into. And luckily I made it out fine. I actually was up $300 on it. Another one, and this is kind of sad to me because the person that got me into this is currently facing criminal prosecution. There was a guy who I know from the East Coast. He was pretty successful in his own right. He had real estate, he had multiple businesses and things like that. He got me to invest 50K into this company, and they were doing. I think it was like we made 20% in 90 days, which again is a very high return, but not really out of the ordinary. There are investments that will make you that, but it's suspiciously high, you know. And so I pulled 50,000. So I pulled 20,000 of the USD coin that I had in Celsius and another 30,000 that I had sitting in a savings account and gave him that 50,000. And I actually ended up pulling the money out last October, November for the purchase of a land. So I got so lucky with these things. I pulled 20K out of Celsius a few months before they declared bankruptcy and paused withdrawals. And then I put it into this Ponzi scheme. And then I was able to pull it out, all the money out of that Ponzi scheme a few months before the SEC sent me a letter saying, hey, this was a scam. You know, these people are being prosecuted. You may be a victim and this and this and that. I'm like, oh my gosh. I got so lucky with that stuff, you know. So what else? But yeah, so and then the crazy thing is that the land deal didn't work out, but it got me out of the Ponzi scheme, if that makes sense. It was so bad. But yeah, I'm trying to think if I have anything else that I forgot. But let me go a little bit into the difference between speculating and investing. So in an investor, they're similar but different. So an investor is someone who has a long-term perspective, and their purpose is to reduce risk. So to manage risk, to preserve the capital they have, to diversify into various asset classes, to reduce their risk, and to generate income through dividends, interest, rental income, and capital appreciation. Um, and investors tend to expect more modest but stable returns over time. And some examples of investments are stocks, bonds, mutual funds, ETFs, which are mutual funds and ETFs are basically the same thing, but a different format, and real estate. So those are some examples of investments. And you can see in this chart on the right here the difference between speculation and investing. Speculators, on the other hand, want to get rich quick. They're not looking at the fundamentals of the business, they're looking at price movements. So Bitcoin, for example, does anyone actually believe, like an investor would look at a company, a stock, and say, oh, I believe this company will be around for the long term, so I'm going to buy some of the stocks and hold it for 20 or 30 years and collect dividends, collect interest, right? A speculator is like, well, Bitcoin has been rising, so I'm going to buy $1 million worth this morning, and then I'm going to sell it this afternoon. That's complete speculation. That's akin to buying a lottery ticket, you know? And so I like to say that speculation is gambling. And it's not exactly gambling. It's more it's more like a get rich quick thing, whereas gambling, you have a much lower probability of making money than speculation, but it's still very, very high risk compared to the to investing, and the return, of course, goes hand in hand with that. And so some examples of speculation are day trading, options trading, cryptocurrency, crypto trading. Notice how I put both of those there. Even holding cryptocurrency is speculation because you're not expecting cash flows, you're not expecting incomes, you're not expecting rental income, you're not expecting dividends or interest from that crypto. You're expecting it to go up in price so you can sell it to someone else. It has no value to you. The only thing it serves as is a just like you're hoping that it's called the greater fool theory, that you're hoping you're going to buy this not because you think it's worth anything, but because you hope that a greater fool will buy it for more money off of you, right? So Beanie Babies are an example. For those of us who were around during the late 90s, who remember the Beanie Baby craze, who maybe might have, invested and speculated in some of those Beanie Babies, the point wasn't that you liked those little dolls, those little plush dolls. The point was that you see other people making money off this stuff, and you think, oh, I got to get in. Same thing with crypto, same thing with baseball cards. there is no intrinsic value to these things other than like the paper it's printed on, other than the $2.50 that you would buy this little doll for, right? So I always like to say that a little speculation is okay. That is why I got into it. You know, at first, up until I had about $200,000, I went 100% stock index funds. You know, I was playing it safe. You know, I had a very long-term time horizon. I had 40, 50 years to invest. So I'm like, stocks are guaranteed to make money in that time. And in fact, if you have a 10-year time frame to invest, you have, historically speaking, you have a 95% chance of making money. Less than 10 years, I would be wary about getting into stocks. But, you know, so when I had about $200,000, I thought to myself, you know what? Now's the time when I could take up to 10% of that money and invest it into something else. And I ended up in putting $1,000 into Bitcoin, which is now worth, I don't know, 60K or something if I still had that Bitcoin, 60 or 70K. I invested in some of the other little cryptocurrencies. I put quite a bit of money into Tesla, you know, and that blew up on me. I also invested in Amazon, that made a little bit of money, and I invested in a few other small stocks that went nowhere, you know. A good investor with these little gambles will be lucky if 1 out of 10 makes it big. A great investor is lucky if 4 out of 10 make it big. So what hope is there for like the average investor? There isn't. So your best bet is to just stick with something broad and diversified, say an index mutual fund or an ETF. But we'll get into that in a little bit. So a little bit of speculation is okay, but I would keep it under 10% of your portfolio. I would avoid anything that's too complicated or that you don't understand. You know, I'm sure each of you has been propositioned to enter into some kind of Ponzi scheme, some kind of pyramid scheme. And, you know, it's, you can kind of see when they, you know, they show this to you. You don't know where the money's coming from. You don't know how the money is being made. And it's too complicated for you to understand. They try to make you feel stupid so you trust them, right? But don't trust them. Avoid anything that's too complicated, anything that you don't understand with a little bit of research, right? Understand that high return means high risk. You know, you know why you only get 4% in your savings account? It's because it's not risky. You know, your money will be there for you. That's why you get a low return to reward you for keeping your money with them. You get a higher return with stocks because it is somewhat risky. You get an even higher return with venture capital because it's even riskier than that because the business can fail, right? So the most I would even like 10% is kind of the highest, the maximum that I would expect to receive for kind of a what do you call it? Like a generic investment. 20% you can get if you do like some side businesses, some, what do you call it? If you loan money to your buddy's business, you can expect 20%. Anything higher than 20% a year is too much. It's probably a scam. Anything doubling your money in 90 days is probably a scam, you know? So anytime you speculate, be okay losing 100% of your money. So what that means is don't be greedy. Don't get wiped out. Never put your money in something that will wipe you out if it goes to zero, right? And there's this story right before the Great Depression, 1929, when this rich investor came out and he was getting his shoes shined, and the shoe shine boys started talking to him about his stock picks. And if that doesn't raise any red flags, it should, because what are shoe shine boys doing investing in the stock market, right? I remember in 2020, I was working at the, you know, the operations at UPS, and one of the people working with me, he had no money in anything. He was not an investor. He was 21 years old, and he was all about crypto this, crypto that. All of his money was in crypto, and of course, he had it on Celsius, and it's all gone, right? So when you hear your grandma talking about some kind of investment, it's time to leave. You know, people who have no business being in these investments, you need to leave, right? And that is the end of my presentation, you guys. Oh, shoot. Was I not share? Can you still see my screen?
Yes.
Okay, thankful. Ooh, I thought I wasn't sharing it. Okay. Okay, I'm gonna stop sharing. All right, guys. Any questions?
I have a question.
Yeah.
Um, you mentioned one of the reasons I never pursued crypto was not only because of the unfamiliarity and the risk, but it wasn't clear to me how you get money out of it. Is there a simple procedure you can explain for getting money out, or if it's worth pursuing at all now?
Um, well, it's always seemed to me to be like video game tokens or Chuck E. Cheese coins. You know, they do have
Okay,
some value within the context of the
that's still
platform.
out of my
Huh?
that's still out of my experience process.
Yeah. So I don't trust crypto. You know, I'll hold some because that the whole point was to put a little bit of money in there and maybe get lucky, right? That was the whole point. But I do believe that the blockchain, which is the underlying, it's like for those of us who understand accounting, it's like a general ledger. But and it has incredible uses in the future. Like, so for example, if you sell someone a house, you can quickly do that with crypto. On the blockchain, you can say, I'm selling this guy this house. And anybody who checks the blockchain will see that that is legit, right? And so it's great for contracts. Like Ethereum does, you know, it's good for doing contracts. And
I
it's
had sent you
possible.
an email saying blockchain may actually work for voter integrity as
Oh
part of
yeah. Yes, it will. It can. And that's a great option for the blockchain. So the blockchain has incredible uses that we don't even see yet. Kind of like back in the early 90s or the late 90s, people weren't seeing all the great things that the internet could have done. And the same reason that the internet is or the internet got so hyped in the late 90s with the dot-com bubble is what's happening with crypto. So it does have a lot of future, but we can't really we don't know. So there were thousands of dot coms that were created and worth millions of dollars. Pets.com was one. There was a few others, but only a couple came out successful. Amazon was one of the notable ones, Microsoft, you know. And so the same with crypto. You know, one or two of them will come out big and successful, but we don't know what that is yet. And my guess is it's probably Bitcoin or Ethereum, but I don't know. And I wouldn't encourage you to get into it unless you're willing to burn some money on your front lawn. Oh, I'm sorry. That didn't answer your question. About getting money out of crypto, you would sell it to a greater fool, or you could stake it. So some platforms such as Celsius, they would pay you like interest to loan them your crypto. But if you don't understand it, I wouldn't get into it. Did that answer your question, Keith?
pretty much.
Okay.
Yeah.
Yeah. Yeah, it's worth if you have extra money you want to blow, it's not a bad idea to get into crypto. But I would not view it as an investment. It's a speculative asset at best.
So there was talks of making blockchain part of accounting, like a new accounting like schema of format. I don't should say there's going to be the future of accounting.
Hmm.
Has that pretty much has a blockchain just not taken off and may not take off for a while? And has AI talk and AI everything else kind of replaced blockchain talk? I don't hear about it too much anymore.
No, I think blockchain is still in the process. It's kind of how the internet, you know, we had the internet starting in the mid 90s, right? And then the dot-com bubble burst, and then everybody stopped talking about the internet, but the internet was still working in the background, kind of, you know, making things happen. I think it's similar to blockchain. People are still working on it. It's just not as visible as it was because of the crypto crash.
Fair enough.
And so, but it will like almost certainly be um it's almost certainly the future of so many things. Anything that requires attention to detail and requires things to be correct for everyone to see all at once, the blockchain will be very useful in making that happen.
Yeah, I'm not particularly familiar with it other than George Gilder wrote a book called Life After Google. George Gilder is a brilliant man. He's in his late 80s, but he's written a number of books, and he really espouses blockchain. Again, not so much cryptocurrency, but blockchain as a technology. It seems to me it's like a database on steroids. It goes into micro transactions and they're all available. Just like a database might compare to a spreadsheet just, rows and columns.
Mhm.
It becomes like three-dimensional in terms of transactions occurring over time and so on.
Yeah, absolutely. I haven't really studied it a lot, but from what I hear, that's about right. Yeah.
I have another question if
Sure.
there's none other present. The economy is not looking good at all. I don't know if you have any opinion on that. This is outside of crypto, but just looking at, well, not only predictions, which anybody can come up with a prediction, but the number of retailers that are closing. And a lot of that is the challenge from online retail. But I know like Rite Aid, the drugstore, is struggling a lot. CVS has said they're going to continue to close locations. And another factor, unfortunately, is rampant crime. And so when rampant crime becomes a reason for businesses to fail and rampant crime isn't addressed, then we have a serious social problem, which will affect the economy.
Yeah, I agree. I'm not too worried because things tend to even themselves out. They tend to, whenever there's an imbalance, the pendulum tends to swing in the opposite direction, and then things get fixed, and then it, swings back. I think, I think a struggling economy is a good thing. For one thing, because it shakes out all the excess and inequalities. And the only businesses that survive bad economic times are the truly strong ones. Like many of the businesses that exist today were created during the Great Depression, and they're still around today. And additionally, and this may sound a little callous, but for investors, an economic crash is the best time to pick up, assuming you still have income. It's a great time to pick up, strong businesses at low prices. Um, so the best thing I can, there's nothing we can personally do about the economy, right? But we can take action in shoring up our own financial stability, and saving money and reducing costs, downgrading our lifestyle if that's a problem. If you're always eating out, maybe cut it down to once a week. If you live in a big house that you don't need, maybe move somewhere smaller. Things like that. There's taking action in our own life to make a better future for ourselves. And also, I'm not super political, but voting into power the people that you think could be more effective, at more fiscally responsible, doing things the right way. And I think all the crime is in California. It's because a few years ago they decreased penalties for anything under $1,000. So everyone, takes that as a chance to, oh, well, this is only worth 800. I'm not even going to get in trouble for this. So they just go in and take it. It's just what it is. They will eventually, increase policing, I think, and cut back on that. So that'll go away, I think, after a little bit. But another reason for this, for the looting and stuff, is one, because of inflation, and wages have not kept up with inflation. And two, because people don't people at the lower end of society don't want to try anymore. It's just too hard. Things are too expensive. Jobs are not paying as much as they should for what it costs. And anywhere the jobs are, things are expensive. You can go somewhere cheap, but there's no jobs. So it's just tough. And I feel that maybe the next election, things will right themselves a little bit. Things will get better. It's a little. I don't feel that the current administration is particularly effective, but who knows? Oh, and another thing, the president has much less power over the economy than people give them credit for. So don't assume that just because a Republican comes into office that they're going to be more business friendly and the economy will climb. In fact, the economy, the U.S. stock market has done better in aggregate during Democratic administrations than during Republican administrations. But in all administrations, the stock market has gone up. So don't or almost all. I don't quote me on that, but So don't pay too much attention to politics when it comes to your investing choices. Just keep saving your money, invest it through your Roth IRA or your 401k or whatever retirement account you have, and invest in, you know, diversified like index funds. Try to stay away from like single stocks or like speculative investments. Only, you know, keep it under 10% if you do decide to go that route. And I know I hammer this in a lot in my talks, but avoid insurance for as part of your investments, because the two things should be separate. Don't invest in like a whole life insurance policy. Yeah. All right, guys. That is the end of the half hour. We can stay on if you guys like, but this will be the end of the. I'll allow one more question before we finish up, and I'll stop recording. All right, thank you guys for coming. And if you have any friends that you would like to attend or you would like to invite to these talks, we're going to do it once a month, half an hour, the first Sunday of every month at 3 p.m. Pacific. And if you do like to invite someone, just have them send me their email, and I'll add them to the list of people that get this email. All right, thank you.